Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we are coming back and having a look at the IWM, which is the Russell 2000 ETF. It has been several months. Now, I have discussed this on a live stream with my patrons a while back, but we haven't really dug into any detail for quite some time. So I want to present a couple of counts today, having had some time to absorb, the more recent price data. I've gone back and reviewed a couple of my previous videos to see where I was and what I was roughly thinking the last time I put this up on YouTube, and we're going to basically work from there. So first things first, I'm just going to turn off the Elliott wave count for a minute, and I'm going to move the chart into the right place. That's a good start. So I went back and reviewed some of the previous videos, and as I pointed out time and time again, we were either creating a launch pad or a peak. We were creating a topping pattern or a launch pad to go higher, and we had a little bit of both. We had a breakout higher and then a collapse. So, the Max Payne scenario where we're going to drag in as much liquidity towards the top of the market as the bulls, the people coming in by the breakout. This is something we've discussed on the Discord. Something I've discussed multiple times in videos as to why we never buy the breakout of a range, because so often you break out and then that happens. We want to be in the habit of buying retracements rather than breakouts. But anyway, getting back to the point, I pointed out multiple times that if we break this level, all bets are off and we could go significantly lower. Now, we could be done, or we could have a lot further to go. Okay. But so far, all we've done is break this level and currently backtest it. Move back above this level, cancelling out these lows here. That is at least bullish in the short term. It could be part of a larger corrective pattern, but it could also signal a low. Okay. Now, the next thing I want to build onto the chart is some levels here. Okay, that essentially give us some ideas to work with. I'm just going to put in there we go. Let's wait for invalidation. That's going to become relevant in a minute. So major support, taking in the peaks here around 2018 and the peaks here around January 2020 before that big sell-off. We have some pretty strong horizontal support. We also have a gap that needs filling here. That might be a target right there, so I'm just going to add that to the chart as well. Okay, and like I said, I promise we'll come and look at the count in a bit. I just want to get some basic structure here. So let's bring up our fixed range volume profile as well, and this is taking everything from a 2018 peak and projecting forward. Now you can see our point of control is below the gap and below both of these peaks, but it's essentially in amongst all of this noise here, right? That's where our point of control currently is. So we can see some pretty obvious support levels already if price were to break down further. And that could still be from where we were trading on the Friday. That could still be another 23 or 25% from here to fall, not just from the top. That's if we come down to these lower targets. It's possible it's even more bearish, but we will bounce before heading lower if it is, or we will bottom and then continue higher. So let's just mark these support levels. So we've got one here at 170, spot 35. This is structural support. Previous highs, previous resistance becoming support. We have a point of control here at 155, spot 08. Okay. So there's some obvious support. Now we can see from the volume profile there's very little market acceptance in this zone here. Okay, I discussed previously in previous videos, having reviewed them, that I said that once we get into this territory we could fall through it quite abruptly. Now that hasn't materialised as of yet. That drop came, we've had a bounce. Now we could continue to accelerate through here and that could play out, but for the moment we found some kind of support. So there's going to be something around here Now it's not structural, it's not previous resistance becoming support, but there's going to be something here, some kind of fib level most likely, so we can have a look at that. But these are your basic levels of support before we consider the Elliott wave count. So my favourite, and I use that term very, very loosely, my preferred count at the moment is that we've topped in a wave 1 and that we've come into a expanding pattern which is not yet complete. This will be 1, 2, 3, 4, 5, and it will be A, B, C. Okay, you could count it as WXY as well. So let's just bring up that count now, and I'll talk you through what I like and what I don't like. So, in fact, actually, before we do this, let's revisit the last thing we had on the chart. Okay, I've moved the 4 down here to accommodate this, but this is the thing I've given up on. Because and we were tracking this as a primary 3, and then we were looking for a 4, and then we were looking for a 5. Now, the problem I've had this whole time is without really stretching and breaking, well, bending rules to the absolute limit that you could argue all day and night whether or not you've broken them. This pattern here, we've considered the possibility of it being an expanding ending diagonal in order to go 3, 4, 5 to here, but I don't like it at all, just putting it simply. Either way, we either get a 1 here or a 1 here, or we get a top 5 into a larger cycle wave completion, right? So we're topping out in one way or the other. And the way I see it, preferable to this being 3, 4, which I now think looks ridiculous. 1, 2, 3, 4. I just don't buy that. So that's off the table now. The two sentiments I seem to be coming across the market at the moment is you've got the typical bearish sentiment, which is this is the top of the top of the top of the top, and it's all over, and we're falling forever, and we're never going to recover, and it's the end of the world. I've been hearing that every day of every week of every month of every year that I've been trading, which is quite a while now. There's always people saying it. Now, one day it's going to be true, and the bears will all be right when that day comes. That day could be now. That's always a possibility. But we're not going to give it too much credibility on the count that's constantly being shouted from the rooftops literally every hour of every day. So let's put that to one side to begin with. The other one that I see is that we are part way through an impulse, which I don't like the idea of here on the IWM, or we've completed a larger degree within a much more extended motive wave structure, which is going to last for many years to come. They're the two that I seem to come across the most. So you've got the bear camp, which is always present, which is the top's in and we're fucked. And then you've got the bullish camp, which seems to be divided between halfway through an impulse or just completing the first wave 1 of a larger impulse, with some people calling us a bull market lasting out to 2029. I've seen that. The logic being obviously 100 years from the last great crash. But whatever, I mean, there's evidence to support it either way. We'll just keep counting in the meantime. So this is the best I've got currently. This was a single move, and that this is corrective. Okay, I think trying to tie anything in here to this just doesn't work as an impulse. Right, I feel that this was a move to a high. This is corrective, and then we're going to continue. Now that's my preference. Like I said, I'm not feeling particularly. What on earth have I done here? Alright, there we go. I'm not feeling particularly confident either way, to be honest, but this is my preference. So on that note, I see a move down to support to come. We've come through major support, we've backtested it. I think we've got another move to come down lower, but there is the possibility of having bottoms, so we have to be aware of that. Now let's look at Fibonacci retracement from the low. So we're going to come down here, hold down control to put on the magnet, and we're going to come up to the peak. We're not going to take the wave 1 for the moment. I just want to get a feel in case there is a way of getting this to top over here. And the 1 isn't here, the 1 is here, right? In which case this could be the beginning of a much larger zigzag. That's the possibility. Now, I can't get the count to complete up here, but I'll move it across and look in a minute. I just want to look at it from the dominant pivot. And the dominant pivot, which I find quite interesting, is if we just remove this support line for the moment, take the levels off the chart, a 50% pullback would test the previous market highs of 2000 and 2018. This is 50% retracement. Okay, and that just so happens to cross right where we've got our structural support here at 170.35. So this is a strong area of confluence for support. Now it wouldn't fill that gap, but a wick through, just a wick through, could easily fill the gap, and this could still operate as support, bodying the candle above it as and when it comes. Now, what I next find interesting is that the 61.8% golden ratio level is right around our point of control, around this 155.08. Now, that's where our greatest area of market acceptance is, the greatest area of trading volume of buyers and sellers. Now, it's not particularly convincing on the volume profile of the 50, but it is still structural support. So the two most likely levels I see us coming to are 170.35 or 155.08, and we could come down there in a series of ways. This for me so far says 1, 2, 3, 4, 5 into 1. Three-way move into the A here. Three-way move into the B. Got a little running triangle in the B here. And then 1, 2, 3, 4, 5 to either the 50 or the 61.8. Now this 4 could play out as a triangle, right? Give us a lower finish before heading down. It doesn't have to be complete yet. We could go ABC, ABC, ABC. You get the idea, and do something like that. Now on that note, we do have an invalidation point here where this 1, 2, 3, 4, 5 idea dies, which is at 212.83. So if we come back above that level, 212.83 here, and the 4 comes back above here, we have to switch off the idea of this being 5 waves down in a C. So that would then leave us the option of having either topped here somehow, which I'm still working on, in which case, having completed here, we have either A, B, C done, 1 into 2, very short and swift correction, or we've got A, B, C into W. This will be an X wave, and then this will be another zigzag into a Y, bringing us to that 50 or the 61.8. So let's just pop that up as an alternate for the moment. So I'm just going to save the chart. We're going to take the count off, and I think I've got it somewhere. You have to bear with me. Yeah, this is the idea that the market is topped. So I will show you how I bullied it, and you'll have to forgive me for the abuse. So this needs to be downgraded in weighted degree. I've got this as primary. Alright, but if you wanted a super uber bearish count, you could say this was 5 into 5 into 5 at cycle wave, and we're absolutely fucked. And this is 1, 2, 3, 4, 5 into 1, 2, 3, 4, and so on and so forth. Okay, just to find an A, which would be the total collapse of the entire market. So there's no point really considering that, because if that's the case, it will unfold over such a long period of time, and the swings in it will be so extreme that you won't know whether you're coming or going until you find yourself down 50, 60, 70, 80% anyway. And as long as you're trading responsibly, sensibly, taking the setups for the short side or long side as they come, you won't get chewed up by it, and that I think takes priority over anything else. But getting back to the point, another way then of having the 1 here is if we downgrade this to intermediate degree and put the 1 here. Now, like I said, I've had to force this absolutely hideous expanding ending diagonal to try and get the market to top here. So as an alternate, let's have this as an ABC, and then it's either ABC complete 1, 2, or it's ABC into W, X, and then a Y will come, taking us into another zigzag lower. Okay, to complete primary 2 at the 61.8 or 50. I'm just going to say that like that, because if we come back above this invalidation level, this is more likely correct. It's either ABC done or ABCW. If this invalidation point holds, then the idea of 5 waves down is still valid. And let's just put that back into the market top folder here. And there you go. So this is be my alternate. ABC complete or ABC into W with the top here. That would be my alternate. I think my primary, well, I will just say my primary for the moment is the idea that we've done a wave 1 and we're expanding into a wave 2 looking for these support levels. So as you can see, I've taken ABC swing flat pattern here, expanding flat ABC, which puts the 1 here, not where we've currently overlapped in the B wave, so we haven't overlapped here yet. Alright, and that, guys, is essentially the best I can give you at the moment. So let's bring up the RSI and the MACD here for a moment, see what we can see. Now this was a sucker of a B wave, it really was, because whether this was B or 3 into 5, we actually got a high reading on the RSI, significantly so. No clear triangular pattern or something to support that for a 3 and 4. It's just sideways shit, as I like to call it. It's either WXY, big mess, into an expanding diagonal, or it's part of a correction. You know, and what we got was a high reading in the RSI here, which is at least level to previous peaks. So no obvious divergent giveaway that we were about to collapse. Just a violent reversal when it came. We've since double bottomed in the RSI here with an oversold reading, and we do have some bullish divergence to speak of. Okay. So if we have bottomed, then the single ABC seems to support the idea that we've got this bullish divergence, right? But we'd have to see price come back above this invalidation point. We'd have to get an impulsive move out of here. I'm not sure that's clear yet. We'll need more time. No such divergence on the MACD. Momentum going below the zero bound. Alright, and strengthening to the downside. So let's just show that. So you can see here this pulse of bearish activity, then this pulse, and we're just whipsawing in between green and red, and then we start to increase to the downside here. We've got this trend of lower lows occurring in the MACD, and no bullish divergence between these lows. Right, so it's just all round a bit bearish. Okay, see if that plays out. Let's look at it on a weekly time frame. We've just reached oversold conditions on the weekly time frame, so some kind of bounce obviously is already underway. This could become a time wasting triangle in a wave 4 or some kind of complex. Cooling off on the MACD on the weekly time frame as well. No sign of a buy signal here or a bullish crossover of the average over the signal yet, but we'll see if price action supports that. So that's the best I've got for you at the moment. So let's just sum up our options here. My primary count is an expansive correction into a primary 2, with giving up 50% of this prior move, or maybe 61.8% of this prior move from the March 2020 lows. We've got our supports at 170.35, which is the 50 fib and previous market structure, resistance becoming support. And we've got our point of control at 155 with our golden ratio at 152.52 just below it. We can come down here quite easily in 5 waves to here or here currently. Now if this breaks and we come back up above this invalidation level at 212.83 and we invalidate the idea of 5 waves in the C, then we can switch this one off and consider this idea instead. As you can see, we broke that upward trend. That is using a pitchfork there. Hide that out the way. And at this point, we're either having a very bullish ABC2 complete, in which case we should get a nice clear impulse out of here, supported by volume. Okay, and get a nice clear 5-wave structure. Would be preferable. We could get a diag, but let's say we get a nice clean impulse in here and 3 waves back, and we find support prior to these lows. That could be bullish. However, that seems awfully quick. Awfully quick. If we've completed a larger wave degree 1 here, that does not look like enough time to correct it. So if we do come back above that, I would lean towards it being a longer correction. Zigzag here perhaps, which is a clear zigzag, into some kind of connective X wave. It could be a triangle for all we know. X could be a triangle, and then another zigzag lower. Alright. And that's the best I've got for the IWM. Sorry it's been so long since I last updated you guys. It's all been about cryptos, to be absolutely honest with you, lately. I have been covering stocks and other things in the weekly live streams. I will be again this week as well. So yeah, that's it. If you're new to the channel and you like what you see, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below. And if you are interested in joining the Patreon and in joining in on those weekly live streams and having access to the Discord and all the other benefits which come with it, there's a link in the description below to the Patreon. Go have a read of the different tiers, see if there's anything you're interested in. We have just reached the middle of the month, so you might want to leave it to the start of next month before signing up. But it's totally up to you. And if you're not following me on Twitter yet, please do so, as whenever I release a new video, I always announce it on Twitter. Alright guys, take care of yourselves, and I will be back later in the week. All the best. Bye bye.